Recording in progress.
What's up, everybody? Welcome. Happy Thursday. We're opening up the room just a minute or two early to give everyone a chance to get in here, find a great seat, and get settled.
How's it going, Reva?
Where are you joining us from the world, Reva? Myself, I'm in Southwest Florida. Richard here is in Cape Town, South Africa. Tony is all the way over in Seattle. Atlanta. Excellent.
Atlanta.
Beautiful city. Very cool. We're going to get started in just a minute here. We opened the room up a little early just to give people a chance to get in and get settled. So we are going to get started with profits at noon in just a minute or two here, guys. Awesome. It looks like I think there may be another Ninjacators event happening somewhere this morning. So some of our regular crowd has maybe filtered over to that event. So we'll just
I've seen a lot of emails going out since last night already.
Sure.
Hi, James.
Welcome, James. Yeah, I'm not sure when that started, actually, Richard. That may have maybe going on right now.
Could be.
Excellent.
Some people coming in.
Yeah, David.
Byram.
Welcome.
David.
Welcome. It is noon Eastern on the hour here. It's actually noon 01. We opened this up just a minute early to give everybody a chance to get in and get settled. I don't want to go on too much longer, so we'll probably kick things off here just to get started. So we do have a pretty good crew with us here. So welcome to the Thursday edition of Ninjacators' new weekly live event called Profits at Noon. We are live 3 days a week, Monday, Wednesday, and Thursday at noon Eastern time. We are going to be showing you the levels that we are stalking for entry and steer you clear of any market traps, any news bombs that could be waiting. Obviously, a big topic on everyone's mind this week. We had the big Fed rate decision yesterday afternoon. We talked a little bit about that in our earlier sessions. If you joined us Monday or Wednesday, I know traders were kind of bracing for that. So Richard is going to walk us through that, the reaction to that news, and where he thinks things are headed next. So stick around. Richard's got lots of great live analysis to show us. In addition to that, we are showing what we call our levels to lock. So we have levels to lock prepared for each of the 6 futures markets you will see today. In the near future, we hope to be launching a newsletter with these levels to lock, where you'll be able to follow those levels even outside of these live sessions. So more on that. So stay tuned for more details on our levels to lock newsletter that will be coming soon. And one other thing I would like to mention, if you joined us in any of these previous sessions, you'll recognize our special guest in the house here today is one Tony Edwards of TraderSmarts. So Tony is back in the house today to show us the final of his 7 setups, as well as a very cool and exclusive link for a trial to his trade planning software. So lots of great stuff to show you. After Richard is done, I will check back in with you guys before we pass the reins over to Tony, and we will make sure there is plenty of room for Q&A. So if anyone has any questions throughout the session, please feel free to fire away in the chat, and we will be happy to dive into it with you. So without further ado, I am going to pass the reins over to our co-host today, Richard Krugel, the man, the myth, the legend. Take it away, sir.
Thanks, Nate, and hello everyone. Thanks for joining us again tonight, I should say tonight. It's afternoon for you guys.
Definitely tonight for you.
Yeah, as always, before we get started with the analysis side of things, just mention that all the information in today's session is provided for educational purposes only. There's not an offer or recommendation to trade futures, stocks, options, or forex. All right, let's just get rid of that screen quickly. Let's jump straight into the charts. Again, we're going to be looking at the ES, the NQ, the YM, the Russell, gold, and crude oil. We're also going to be looking where price is trading in relation to the levels to lock that Nate has mentioned. and sort of also look a little bit of pattern analysis and give you a little bit of an idea where I think the markets are moving towards. Before I do that, I'm just going to quickly disappear off screen. I'll be back a little bit later after the analysis parts. All right. Right, as we all know, the Fed rate decision came out yesterday, raised with another 25 basis points. I was mentioning that, you know, it could either be a non-event or see one hell of a reaction. Wasn't that one hell of a reaction? I think we were sort of presenting last night at profits at noon when price actually hit this area that I marked over here, and I mentioned that we might see resistance step in there. Obviously nothing to do with the actual rate decision whatsoever, but obviously there was quite a strong sell-off. And as you can have it, obviously, again, a strong bloody reversal to the upside. So very difficult trading conditions. According to the news or the punters, they will reckon that the reason why the stocks are going up today is because the Fed might only raise interest rates once more this year or even consider cutting interest rates. So apparently that's the reason why we're seeing, I don't know, positivity in the stock market now. This banking chaos thing sort of like dwindling away a little bit, and the markets continue moving up now again on all of the indices. When we looked at ES yesterday, and actually the whole week for that matter, I also mentioned this last week, is that I was still thinking that we're dealing with a potential leading diagonal. Now, what I'll quickly draw off screen here before I get into all of these levels is that this could potentially have been a very strong low, but you'll see there was actually a much lower low, obviously, last year in October. Sorry for all these colors on the chart. I'm in a 4-hour chart. But this move lower down here potentially could have been an end of a very large correction. Again, I've been tracking that correction using a pitchfork to the downside, sloping it to the downside. When Tony joined us, when was the sort of the beginning of March, we were looking at an area we had confluence. He also had an area there where price reached, again, also during one of these sessions, and we had a strong sell-off afterwards. Now, since this low to the downside here, this can be counted as a 5-wave sequence, 3, 4, 5. And if this is a strong low, then I was saying the only way price, in my opinion, is starting to build its way up is by either creating a 5-wave movement, maybe get a correction later that fails to break that low, and then we get another strong move to the upside. So we need to see some sort of a 5-wave sequence. The only thing that we've been seeing here, though, is that we've been seeing this 3-wave sequences. 1, 2, 3, move down. 1, 2, 3, move down. And then when was it? Wasn't beginning this month. It was, oh, sorry, this week. It was last week, I think, somewhere I was saying that if price were to break this previous high, and if this is the start of a new move to the upside or the initial stages of a much larger move to follow, then we need to see some sort of another 5-wave move. But there was it was a bit impossible counting a nice 5-wave move to the upside here somewhere. You know, here it was very clear. 1, 2, and that one doesn't look like 5 waves, in my opinion. So the only other thinking to make this still work as a leading diagonal is like this potentially being one. That was potentially a very strong low yesterday. And another move that's going to take out these highs, might even extend a little bit higher. If that does happen, then I think we've got a 5-wave sequence to the upside, i.e. a leading diagonal, sort of a very overlapping sort of move, 3 waves, move down. 3 waves, move down, 3 waves, and we potentially, where this low was, is potentially what we're seeing here. So we're getting another move to the upside that, in my opinion, would be a potential wave 1 starting to build its way up much higher, but not after, but only after a correction, then lower again, and then a move to the upside. So, you know, looking a little bit of what the patterns are telling me, sometimes give me a bit of directional bias. Obviously, also look at where these market geometry lines are from the pitchforks, where support and resistance might step in, etc., etc. And again, obviously also looking at our very important levels to lock. If you look at today's pivot point at 4,003, price sort of hovered below it, and during the current 4-hour candle just broke above it and nearly reached R1. Now, the only reason, well, the only thing I would say, if I'm completely wrong about this, that this is a leading diagonal, would be if we start seeing a decline without price taking out yesterday's high. And if we were to break yesterday's low, which was around about 3,966 and a quarter, then I think that invalidates the whole idea, in my mind at least, that this was a leading diagonal and rather some sort of correction, potentially just an ABCX, ABC, double zigzag, and then we're going to see another decline. So thus far, sort of price has been on track what I've been thinking with the bullish side of things. So I'm going to stay bullish for a little while longer. I think for as long as price stays around here and hopefully break this highs, but not only after a correction, then we'll start tracking things and see with market jump potentially where we could also find an area of support and then see another upward move to the upside. So I think this could be just the early stages of a much stronger bullish wave to the upside. But again, we got to watch these levels. If price fails to break previous high and we make a strong reversal to the downside instead, then I'm going to have to swing back to the bearish side again. Just because, you never know which scenario is going to play out. And I've mentioned this yesterday. I've always got a plan A and a plan B, trying to figure out to stay ahead of the market, what patterns I'm seeing, and using my, how can I say, my experience of studying patterns for a very long time, and how sort of new trending markets tend to develop, or how corrections tend to look like, where they tend to end, etc., etc. So that's my thinking on the ES. We won't obviously have another profit at noon tomorrow, but maybe, who knows, maybe we rally for the rest of today and tomorrow back into these highs. What's also really cool is yesterday's highs almost found resistance at that area marked out. It hit, I think it was a second standard deviation projected high yesterday, which was at 4,075 and a quarter, I believe, and then strongly moved back to the downside. Again, retesting this line to the upside, which is a market geometry, Ryan, sort of what we call a retest, a kiss goodbye, and then a decline. And I think if price now takes out that new high again, like I mentioned, that leading diagonal, at least in my mind, is still in play here on the ES. All right, NQ, similar thing. Strong sell-off yesterday and immediate recovery back to the upside. Price again also here opened overnight session below the pivot point at 12,819, closed above it, and has now since reached R1 at 12,900, what's it, 61. Again, a lot of these pivot lines, also these projected ranges to the upside and downside, will be mentioned in our levels to lock newsletter, which will hopefully come out soon. We've been saying this for a little while, so I do apologize for that, but trying to get everything as, as sorted out as possible with no sort of technical gremlins involved with that. So, and once you have that, you will have all of these levels about 15 minutes prior to the stock market open. So that I can basically tell you, let's say price was trading down here, when you woke up and you got the levels to lock newsletter, and I would, for example, say we see a 4-hour close above pivot point, potentially see R1 reached, something like that, to give you a bit of an idea of what I'm expecting and where markets could move towards. So at the moment, also when you see very strong movements during the early morning time, or even during Globex session, and I get to the profits at noon without the newsletter, I'm just basically mentioning these levels, which is going to be way more beneficial for you guys when we actually get that newsletter out. So the other thing that's really interesting to see is that price also reached that projected range high at 13,027.5. Now, these are our proprietary, it's one of our proprietary indicators here at Ninjacators, and it's based on previous days' volatility. So it's a little bit different than the standard pivot points. and to a very high degree, price tends to move towards them and find support or resistance. Obviously, now we blend this with market geometry, pattern analysis, etc., and then I will, again, like I said, mention this in a newsletter, give you a bit more of an overall trend, maybe in the bigger picture, what I expect for every single market that I cover, and what the plan is for the day, where I believe price might be moving towards. So you sort of have clear goals or levels that price could potentially reach, etc. Right. So on the YM, it's been stuck in sideways, sort of pretty big range actually. Broke out of it. I think it was Friday last week. When was this? On the 21st. Again, yesterday, same thing. Boom, straight back to the downside. Really cool again to see these lines over here were yesterday's lines. They were at 32,994. That was a projected range high. And you can also see how well that acts as resistance. Again, not just the lines, obviously, it's also got something to do with obviously the rate hikes that came out, but also just cool to see how these levels tend to get respected. So again, strong move to the downside. I'm using the ES mostly here to try to give myself direction, because if the ES is going to move much higher, maybe start a new trend to the upside, then the NQ and the YM most likely going to follow as well. Although the price patterns obviously do differ a little bit on these other indices. All right, Russell also moved lower. It's been trading to below today's pivot point at 1,761. It's been trying to actually break above it, but it now actually failed on the current candle, or the 4-hour candle, to reach R1 at 1,783. Again, the Russell also in a bit of a mess here, sort of a sideways sort of movement. For me personally, I want to see the Russell break out and stay above either the upper limit of this range at about 1,807 or towards the lower limit around 1,728, and then sort of decide, are we going to be bullish or bearish about the Russell? So a bit on the sidelines with the Russell at the moment. Then we got gold. Obviously, gold's been flying way higher for a very long time. I think, Reva, if you're new here, like I said, I use market geometry as well. And I quite often like to track or slope a pitchfork in the direction of a move. And this stays a very strong trend that we've seen in gold. And quite often when you see these angular lines, price either finds resistance or support at them, etc. Now, there's obviously a situation here where price broke out of that upper line to the upside. It did not hold as resistance this time around. That was on the 17th. Oh, sorry, I shouldn't have done that. But anyway. If I use the 3 most prominent anchor points prior to this very strong move to the upside, look what happens if I copy and paste the same angles and just add it to the top. This high that came in here on the 20th exactly touched that upper line, and we've seen a strong rejection to the downside. Now, I was expecting around about that time to see some sort of a correction. Whether this correction is now ended or not, prices again shooting back to the upside again. Very difficult market conditions from a pattern perspective to trade, because you have these one moves down, one move up, one move down. And strong zigzags without any sort of nice structure, what you would expect during normal calm market conditions. For example, if you, let's say, have a correction, typically you will have a nice move, an A, B, C, or a more complex correction, and then another move to the upside. So I wouldn't be surprised if gold either pips and make another high, and then we see that correction I've been waiting for, but I've actually been hoping for a deeper correction. Still bullish gold over the near term, but yeah, price also failed to reach this median line over here. But what's really interesting to see on gold here is that if you run a line parallel to one of these pitchfork lines, let me just get rid of this top one. There's too much lines going on here. Where is that line gone? Oh, here we go. You see, you run a ray parallel to one of your pitchfork lines, projected to an area where it actually failed to reach a line again, the low that we've seen here on the 22nd yesterday. perfectly touch that line again and move to the upside, which tells me that price is still respecting this angle or slope of a cent at the moment. So no issue to break above the pivot point today at 1,964. Already just reached the R1 at, what's that? That label's behind my price label at the moment. About 1,991. And it looks like gold wants to continue higher. If we're going to get some sort of resistance here, one would expect, and if this is some sort of a correction, that it could potentially happen at one of your FIB retracement levels. It already had a little bit of a sort of resistance here at the 61.8, about 1984, and we got at 78.6% at 1997. So a break above this, and I think gold's going to go to new highs, potentially R2 at 2009, whether that's today or tomorrow, or even to that projected range high at about 2014. But this could be, in my mind, sort of an area where, you know, if we see a strong, let's say, resistance step in here with a strong decline afterwards, then I'm going to be treating this as an A, a B, and then a potential C wave to follow, which might move or retrace a much deeper portion of this move that we've seen to the upside, and still treat that as bullish, thinking that whatever we're going to see then is just a correction and potentially then another move upwards at a later stage. That's the thinking. Like Tony will probably tell you, always try to trade with a bit of a plan, but anything can happen, anything can change at any single moment. So just be flexible enough to, you know, change accordingly. And don't always just stick to your bias. The market's always right, and you just have to basically trade what you see. So yeah, I'm thinking this is sort of the last area where gold might find resistance. If we do get, like I said, a strong decline from that area without making a new high, I'm still going to treat it as corrective in nature. But these days, you can see this in all of these markets. You get a strong move down, sort of these V-shaped bottoms, inverted V-shaped tops, straight down, straight up, straight down, straight up. So pretty difficult trading conditions if you're trying to be a swing trader, that's for sure. All right, crude oil. I was talking about, I think, when was this? On the 19th, well, I think beginning of this week. So I'm really missing my days on Monday. Yeah. So we're expecting some sort of support to step in crude oil, and that any sort of move to the upside, I'm going to also treat as corrective, this time a corrective bounce to the upside. Now, we did get a nice strong move back up. I was thinking that these previous highs at that stage will probably be tested. The price has taken that out. Crude's been sort of hovering around today's pivot point at 17.7004, sorry. Just reached the R1 at the previous 4-hour close at 71.19. So it remains to be seen. Are we going to still see more upwards movement in crude oil? Again, sort of same thing here. We have potentially a 1, 2, I don't know, a 3, a 4, 5. We'll again get something like this, and then another move to the upside. Potentially get a much higher sort of correction, in my opinion. Now, something I missed and I didn't see here yesterday or the day before leading into this high on this low over here is this looks like an ABC correction, and then you made a 3-wave move to the downside that just failed to take out this low. Now, quite often, if that happens, it can be a clue that this entire thing is just corrective also in nature, but that the correction started here instead of here at this stage here. Because you would expect a 5-wave movement from a previous correction. In this case, after a downwards move, you get a bounce corrective to the upside. And instead of getting a 5-wave sequence into a low, we just got the 3-wave sequence. So that could potentially mean that we're seeing this, an A, and that this was actually corrective, and that this is potentially a C wave that's still underway or getting close to completing, and then we see a move to the downside. If you look at the bigger picture here, I won't be too long more. I'll just pass things over to Tony. Crude oil here on the daily time frame So you have a bit more of a better idea what the bigger picture was doing. I was saying, obviously, for a long time, it's very easy to see. I think anyone can see that. Crude oil's been in a messy sort of strong downtrend for quite some time. Price has been finding support last year at this low median line, broke a little bit below it, support, and then recently broke below it again. It didn't sort of reach areas yet where I think strong support could step in from a market geometry perspective. So I was saying that if we see a move to the upside, that I would treat this as corrective in nature, and potentially that we could see another decline at a later stage. Now, if this angular support turns into resistance, then that's sort of about around 72.24. Let me switch back to our 4-hour time frame. 72.24, sort of here, just below the R2 at 72.46. So that could potentially still be reached. But as you've seen what I've done previously there with the gold, quite often if you work with market geometry and you take areas where prices previously broken below an area and not 100% stopped on it, and then you take a line parallel to that, you add it to an area where a line previously broke below, or let's say price broke below another line, then that might act as resistance right now and turn price lower instead. So I'm almost kind of thinking that this here is corrective, is actually a corrective pattern, where this being an A, a B, and a potential C. I just want to look at one last thing before I pass things over to Tony. Now, quite often if you run a pitchfork or slope it in direction using the anchor points that you believe are the actual corrective points, then let me just do something here quickly. Look how beautiful that's worked. Resistance, 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 broke above it. So we could potentially still see a move into this area. And if this is an ABC and we see a strong decline, then I would start thinking that's potentially the end of a correction. And that's also going to then coincide with that lower median line in the bigger picture. So it was sort of a bit of a confluence area there. So be aware of that area. If we get a very strong decline from here, either now or later next week, whatever the case might be, then that might be the end of a B, a C, expanded flat correction with a potential another move to the downside. That's my thinking. Again, anything can change. I'm just trying to stay a little bit ahead of what's happening, trying to have my plan A, my plan B. If this, then that sort of scenario, and have a few scenarios to play with. Right, that concludes my analysis today. I'm going to pass things over to Tony, but do you want me to quickly go over a questionnaire? Nathan?
Sure, yeah. Actually, Richard, I was going to mention real quick, looks like Riva did have a great question for us, and who better to give him some insight than you. So I was wondering maybe, well, just for the sake of the group, I'll share, it's all new to me, still trying to figure out what market to learn first. This is a great question, and honestly, I think a lot of people could benefit from this answer. So just wanted to create some space for you to dig into that before we pass over to Tony.
That's a difficult one. I mean, everyone's sort of got their favorite market. I traded crude oil for a very long time. When I first started trading crude oil, I lost head over fist the whole time. It's just, it can be a very brutal market, move very fast. But then again, these days, any market can move fast. I think to answer that question is really all got to do with your risk tolerance. How long have you been trading? Have you had any sort of success previously? Maybe you should start focusing on the micros, perhaps, something where if you are wrong in the beginning, you're still trying to learn, but you want to trade live. Everyone can always tell you, you must always trade in a sim account. Tony will tell you this as well. Never trade with money you can't afford to lose, all that sort of stuff. But, nothing really prepares you mentally for when you really start trading with a live account. So I think if you do get to that stage when you do it, perhaps just trade something where like the micro lots or the micro contracts on the ES, the MNQ, gold, and so forth. So at least and have some sort of a strategy that you can work with. Maybe paper trade that for a while. Again, I'm not a financial advisor here, but at least try to trade something where, like the NQ could be brutal, even on one contract. But if you trade the micro contract, at least when you're wrong, but still always obviously have a stop loss, know what your risk is going to be with whatever trade you're going to take with your strategy, that at least you're not going to lose, 10% of your account in one go. And you're like, your account explodes in one trade. So, Riva, difficult to say which market to learn first. I started with Forex. I think most people back in the day, maybe even now, started with Forex. I slowly moved into trading equities here in South Africa on the trading floor. After that, I went on my own, traded futures almost exclusively. Then I got involved in options. I really love trading options on the futures side of things. So I still do that today with the same sort of analysis I perform, but just a different sort of trading vehicle to do it. But then again, options is not for everyone. It's quite a big learning curve involved in trying to understand options. Again, that's just a personal choice. Maybe Tony can elaborate on this question when I give things over to him. But yeah, first things first, risk is everything. Know where your risk is before you get into a trade. Maybe, when you want to dip your toes in the live market with a live account, then maybe do it on the micro contracts. So like I said, you don't want to blow up your account, get that sort of mental damage, emotional damage that you completely just walk away from trading and so forth. I mean, a lot of traders get absolutely destroyed because they don't understand risk. They don't understand the ins and outs of the contracts they're trading, expiry months, tick sizes, margin, all that sort of stuff. So maybe the first point is to learn properly first, and maybe sim then. And if you want to dip your toe into the water, then yeah, you go on from there.
Sure.
Right.
No, absolutely. Thank you, Richard. And I think you have a great point there too, as far as, starting with some of the micros, just less at stake. I know some people have varying opinions on paper trading, whether that feels the same emotionally, whether the stakes are the same, whether you behave the same. So I understand the nuance there between, paper trading and real life trading. So a great segue, start small. Single contracts, micros, things like that. So, and we actually did have some follow-up questions sprout out of that. And just so you're aware, we'll take this to the top of the hour with Tony today to ensure he has enough time to get into this setup with us. But it looks like Clinton also had a follow-up question for us, and Riva had a little bit more to add. I'm not sure, Richard, if you're able to see Riva's follow-up question in the Q&A there.
It's all new to me, still trying to figure what market to learn first. Is that...
It looks like it's a separate category for the Q&A, but he did drop, I'll just tell you real quickly.
Q&A there.
Does the market repeat daily? Then you look for a devastation. He's been looking on and off since October of 2022. So he's been exposed here for, a little over about 6 months.
I see. I'm not sure what you mean by devastation, Riva. Does the market repeat daily and you look for a devastation?
Deviation.
Deviation. Deviation. For me, I like using divergence, for example. Deviation, probably not that much. I'm really big into market geometry, and obviously I look what I call where I see multiple things, not just one tool, for example, market geometry lines, but also these levels to lock. Where do they cross? So you got two different sort of techniques. One could be an indicator, one could be a drawing tool. Where do they cross? And not just sort of blindly try to just jump into a trade in the middle of nowhere. And we'd rather wait for these areas to be hit if you have the patience. There's also a big thing which a lot of people struggle with. I sometimes look at momentum divergence. Smaller time frames can even look at volume divergence, sort of a mix and match between a few things, and then you want to see a reaction from these areas. For me, it's like, where do I want to do my business without, jumping into the business straight? Do my homework first, decide where those areas are. That's where I would like to trade. If market moves into there, you can look at momentum divergence. You can look at reversal candlesticks. I mean, Tony's got his own methods as well. And then you need confirmation that the market wants to do something at the area and potentially reverse or have a continuation. I know Tony's got about 7 setups taking different directions according to his levels and his zones. So at least you're planning ahead. And then once you get a reaction from it, that's when I would trade. You understand what I'm saying? But I don't trade all the time. Like to perform my analysis, but sort of have a great idea what my game plan is for the day ahead, and not just like open the screen and you know, oh, I'm seeing this on the 1 minute chart. You don't know what's happening on a 4-hour chart or the 10-minute chart or whatever the case might be. You get sucked into that noise, and you just make a lot of mistakes and trade. So yeah, it's you're going to have days where stuff moves sideways. You're going to have days where you get strong trends. But for me, again, trying to identify those areas I want to trade. For example, in crude, I would like price to hit that area. If I see a reversal to the downside, yes, then I potentially trade it. I could trade this on options, or I can maybe switch to the crude oil contract like I'm on right now, but perhaps day trade that. So, I've got a few sort of investment or trading vehicles at my disposal, but obviously, comes with years of experience as well.
Sure. Yeah, absolutely. And the more of these techniques and the more of this you understand, obviously, it begins to accrue. And then you have, not to say options in the sense of contracts, but you actually have options available to you, which is fantastic. I mean, it's a better position to be, the less guesswork, the better, obviously. And I do see, Clinton's question. This is a great question. And I do wonder if this is something that we would even, potentially be able to get into a little deeper on Monday, maybe dedicate some time to it. If that's something you'd be interested in doing, Richard. But Clinton wanted to know more about options on futures because he's been having some trouble with that. And I think, honestly, a lot of people would like to hear more about that. So if you're not able to really delve fully into that today, I would float the possibility that we're able to take a deeper look at that on a future session.
Yeah, I mean, I can explain a little bit more about it. Just on NinjaTrader, I don't use this platform at all to trade options. There are other platforms that I use for that. But I mean, Tony can probably tell you this. It's like almost a rabbit hole you can jump down. There's so many different strategies. There's so many different variables that you have to deal with. Implied volatility, your theta, your time decay, how far you're going to go out, which, according for me, what I like to do is I do have high implied volatility. Then I'd rather have a strategy where I try to accumulate a little bit of premium, where like I is selling options. But then, if you're a beginner, selling options can be very dangerous unless you pair that with like, a sort of a cross strategy, or your volatility is very low. You want to be buying options because then it's priced cheaply. And I mean, there's so many different things to go in. I don't know if this is a bit of a scope out of what we do here at Profits at Noon, but we could definitely maybe speak to the powers that be at Ninjacators as well, and maybe have something like that one day. I would like to probably talk to someone that Nathan, to maybe talk about something like that to people as well at some stage, because he's the options guru.
Sure, absolutely. And that's something that we're definitely very open to, is putting these things together based on your feedback, based on the feedback of the people here on the ground floor with us in these sessions. We're boots on the ground, and so we're very open to your feedback, your suggestions, and we're more than happy to let you steer us in the direction of the things you're interested in, the things you want to learn more about. So that sounds like something, Clinton, if we see you again on Monday, this is something we'll be taking a look at and see, if there's, what format we can package that in, or to make sense to give you guys more details on that, and particularly Richard's process. But to keep this session moving right along, we do want Tony to have some time here as we get closer to the end of the hour. So I'm going to keep his intro very brief and short to allow him to maximize his time. If you've joined us in any prior sessions, you've been with us to see Tony is sharing a total of 7 trade setups. Today is number 7. So he's got number 7 on deck. deck, as well as a handy link with an exclusive trial to his trade planning software. So we're going to share that with you here in the chat. And yeah, without further ado, Tony, if you want to step in, take the reins, and we'll let you lead us until we close, and I'll check in again at the end of the hour.
All right, cool. Sounds good. Thanks, Nate. Thanks, Richard. So yeah, let's just take a quick look at ES. We just had the FOMC announcement yesterday, and I will give you a brief overview of what it is that I do, and then we'll jump right into the 7th trade setup, which is the law of motion. So can you all see my chart here? Perfect. We have, so when I was back on Monday, this day right here was Monday. So every day I'm producing analysis for 7 different futures markets, the ES, YM, NQ, RTY, 6E, CL, and GC. And, you know, here is yesterday's FOMC announcement. You know, so just the analysis is available for 7 different platforms. And it consists of contract notes, which will give you some idea if there's something important that's going to be taking place for the day. I'll note that there. On the macro, there's a macro section. There's the support and resistance numbers, and then there is the execution target zones, which is kind of the most important part. And the execution target zones are 3 areas on each side of the market that I'm expecting price to want to test into. And also, so I'll look to execute trades against these areas, as well as target my trades to these areas. So it comes in written form. There's a desktop app, a mobile site that you can access from any platform. And just looking at ES from Monday, when I was with you guys last, you know, we had this move through range long. A couple of things to note. I noted this on Monday. If we get a situation where we come through an area that and don't find much, so we're coming into range long, buyers are not really supporting this. And then we come into highest odds long. Anytime we move through a zone without much like action, I guess is the right word, it's very likely to come test this area from the other side. So we had this kind of blow through move here through range long, found buyers at highest odds long, and came back and tested it from the other side, rechecked into a new low against highest odds long into this 38.9775, which was a number Richard had. So there was confluence there for kind of like a swing high low. Richard had as like an over underline, and that being the under part. Found buyers, and that was so far been our low of the week. You know, checked into the top back of range long and then the bottom of it. So thoroughly tested each side of this zone from the other side into the line in the sand, back to the top of range long, and then we ultimately found buyers and pushed over the line in the sand. Had this other recheck here. You know, came into the next session, which was Tuesday, pushed up into this range short that was untested. You know, ultimately made its way through after checking, trading in it quite substantially. You know, Tuesday up into highest odds short, sold off against this 40-15 quarter MTS number. The M stands for macro. So this is an area, this is my big over under line in the sand on a macro basis. Went into Wednesday's FOMC announcement. Just expand this out here. Pretty much spent the entire session gamed out against the line in the sand for the day. Almost testing the range short prior to the FOMC. And then here we have the FOMC. Just one thing to note if you are using the analysis is anytime you see a new TS number or execution target zone from the previous day. So right here we have this zone remained the same, 40.58.5 to 40.48.75, but we had a new number in the center, approximately in the center of it at 40.54. Anytime you see that, very often a fade on the first attempt, just a pure fade. And it's kind of hard to see on this chart because it's a 5-minute chart, but if you dial down into the granular price action, you'll see that we went right into that 40.54 and had I think it was like an 8-point sell-off approximately into this bottom of the zone before we, you know, made a new high into the 64.75, and then just kind of consolidated below the zone. Had this was the press conference, you know, put in a higher high, kind of came down and tested into range long for the first time in this session, and then back over the line of the sand, couldn't get back into range short, ultimately resolved below the line in the sand, blew through the MTS number, sold through range long on the second test and into highest odds long, where buyers stepped in. Again, anytime there's a new zone, so you can see this zone being changed from Monday to Tuesday, it's high probability fade on the first attempt. This ended up being the FOMC low yesterday. It did remain unchanged coming into this session. We tested into it today. Buyers were found up to the line in the sand, gain above the line in the sand, and now we're pushing through. We pushed through range short in this session, up into the MTS number, and now we're essentially trading right at the MTS number. So this 40-15 quarter is just a really important, larger psychological area for, are we going to resolve above this? And then price can start testing back up to probably around 4,200. If we resolve below it, price can probably test down into, just look at the MTS numbers. So like 41.90 quarter would be the target above, and all the way into 37.75 quarter would be the target below this 40-15. That's if you're trading on a much larger time frame than I trade on. I'm an intraday trader for the most part. So that's kind of an overview of ES, brief look at what I do, and I'm going to get right into our 7th trade setup, which is the law of motion. Screen. And if we have any questions along the way, feel free to just put them in the chat. I'm happy to take them in real time, or we can wait till the end. It doesn't really matter. But interaction is good, so don't be shy, speak up. So we're looking at 7 trade setups. In the prior profits in noon, we've went through 6 of them so far. So just a risk disclosure. Let me read this real quick. Futures trading involves substantial risk of loss and is not suitable for every investor. An investor could potentially lose all or more in their initial risk capital. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. And only risk capital should be used for trading, and only those with sufficient risk capital should consider trading futures. Past performance is not necessarily indicative of future results. So we looked at 7 trade setups. We've gone through so far the zone fade, the consolidation breakout, consolidation pullback continuation, the impulse pullback continuation, the brother-in-law move, the VWAP pullback, and today we're going to look at the law of motion. So I'm going to say this this is the 7th time now, but this part is so important. So please hear me when I say this, that market context is key overall. Without an understanding of market context, as well as directional bias, trade setups on their own, to me, are just completely invalid, no matter what that trade setup is. Sometimes they'll work, sometimes they won't, but when you combine them with a good understanding of what the context of the market is, it helps you position yourself in the dominant direction, and gives you a much higher probability of having sustained long-term success. So what do I mean by market context? Do we have a bullish bias, neutral bias, or bearish bias? And on all the different time frames, so a higher time frame, a lower time frame, an intermediate time frame, what is that bias? And then is there anything on deck, like an FOMC announcement or some news event, something that is known that is going to factor into the current market context? So how do I determine market context? Very rudimentary. When I come in the morning, I'm usually only trading the US cash session to the European close, and I'm done for the day. So about 2.5, 3 hours. I just took a brief look at the price at the chart, and I see where is price trading in relation to the execution target zones. So if during the overnight session, price is pushed up above range short, it's giving me an early indication that the bias is bullish because buyers have been able to push price over range short. Converse is true for under range long. If I notice the price is trading below range long, gives me an indication that we're in a bearish tone because sellers have been able to push price below range long. I also take a top-down approach. I'll go back on my execution chart, which is a 128 tick chart from the start of the Globex session. And I'll just review price action and say, so what have we done since Globex opened? What did we do the prior day? and make a determination of what is likely to take place next based on what the market is trying to accomplish. So the caveat, obviously, to establishing market context is you can do all this analysis and have the best plan laid out, and then at any moment, an outside force, which is obviously other market participants, can come in and just obliterate your analysis and your context by, or there could be like a news event, like an earthquake or a war or a hedge fund liquidating or an interest rate hike, an unexpected one, something like that. Anything can happen at any time is my #1 trading rule. And that these outside forces, that these unknowns are what can, change market context on a dime. So the only thing that you can do to prevent against that is manage risk on every trade, which I encourage you to do. So all of these examples can be found, most of them on my Twitter feed, on the media feed, or in the blog. There's a ton of examples on the site as well. So let's get to the law of motion setup. All right, so the law of motion. So the law of motion is based on Newton's 3 laws of motion that describe the relationship between the motion of an object and the forces acting upon it. So in this case, the object is the price of whatever market we're trading, and the forces acting on it are market participants. So now I'm paraphrasing here, but basically the law of motion states that an object will remain in motion. So just picture price moving up, price in motion, or at rest, price doing nothing, moving sideways. Obviously the other side of if in motion would be price moving down. Price is either going to be moving up, down, or sideways. That's the object. And then it's going to be acted upon by a greater force. So if price is moving up, the only thing that's going to make it turn around and start moving down is a force of market participants that have more sell side pressure. So in futures, there's never more buyers than sellers. For every buyer, for every contract that's bought, there's one sold. So it's not like stocks, where there's a float and the float turns over and all this stuff. There's one buyer per one seller per contract. And if price is moving up, it means that buyers are hitting the ask. Generally, I'm just being very basic overview here, but so there's never more buyers than sellers. There's just more buying pressure and selling pressure. So the law of motion is based on this concept, and it makes sense because it's a universal law, right? So it's why the old adage, the trend is your friend, works, because an object will stay in motion until it's met with a greater force. So the law of motion contains 2 parts. Part 1 is the candle or bar structure, and part 2 are swing highs and lows and rotations. Today, we're probably only going to have time to look at part 1, but I will come back in a couple of weeks and we will look at part 2. So part 1, the candle or bar structure. So the law of motion candle entry requires a breach of a dominant candle high or low with risk on the other side of the broken dominant candle. So entry is either A, on the breach of the dominant candle high or low, or B, the close of the candle that breaks the dominant candle high or low, or C, on our retracement back into the body of the broken dominant candle or the body of the candle that breaks the dominant candle high or low. These are usually an interchangeable body structure for the most part, or on some other key reference in confluence with the broken dominant candle. So the key reference in my case will be my execution target zones. I only use this setup when trading against my execution target zones. And just to echo what Richard said in the question that I think that Reva had was, how do you know how to trade these, or where do you trade, or something like that? You have to first establish areas that you want to do your business. That's what my execution target zones are. So taking this setup will happen all the time. Taking it outside of where I want to be executing is not going to pay me in the long haul. This chart. So let's look at some examples of candle or bar structure law of motion. So what do I mean by dominant candle? So here we have execution target zone, which is a short execution target zone. We have, so we're coming up into this zone and we'll say we want to get short at this zone. So I'm watching these candles. Now, let me just preface this all by saying this setup is based on your execution chart. So this is a 512 tick chart. I execute on a 128 tick chart, but whatever your execution chart is what you're going to be using for this setup. So it's obviously going to look different for whatever execution chart you're using, right? So I'm watching, so as price comes into this area, I'm watching these dominant candles. So, and what do I mean by dominant candle? I mean like a candle with a relatively large body. So the body of this candle here, the open and the close. This would be a dominant candle. So we're moving up, dominant candle, dominant candle, dominant candle. Not a dominant candle. This candle right here is not doing anything other than staying inside the body of this candle. Dominant candle, dominant candle. This, again, trading is subjective, so you're going to be making a subjective decision on what is dominant candle or not. If you deem this to be a dominant candle, your setup would be here, and you would be obviously taking a stop above here. But to me, this structure here, these candles are getting smaller, so I'm probably not going to be calling this dominant candle. This right here is a clear dominant candle, so you're just waiting for the dominant candle that you see to be broken. So price is moving up, consolidation, dominant candle, new high, clear dominant candle, spinning top type candle, doji, and then a dominant candle down. If you look at this candle, this is the most dominant selling candle that we have in this whole move up since price made, just comparing candles to these candles or like this candle. So, and what this does is, context, sometimes I'm just fading the zone, like I just talked about in yesterday's 4054 number when there's a new number. Sometimes I want to watch and see what's taking place in the zone, see if there's a reaction, and then get in the trade. This is one way that you can enter a trade without just like pulling the trigger in an area. It kind of gives you, I want to say confirmation, but it gives you something to be watching to get you to trigger your execution, which I find, frankly, a lot of traders struggle with. Is that, hey, I have all this analysis done, I know where I want to execute, but when price gets there, they freeze. Either they freeze, or they don't know what to do, or they just pull the trigger, and sometimes it works and sometimes it doesn't. This gives you like something to be triggering your trade on, triggering your execution. So when this candle comes out and takes the low of this dominant candle, the entry is either on the breach of this, the close of this, or a pullback into the candle that breached the dominant candle. So a pullback into this one against some reference point, which would be this zone. It's either one of those four things, and it's subjective. So you need to make your own decision on that. And then the risk is just a tick or two above the high of the dominant candle that was broken. So you're taking your entry somewhere around in here. Your risk is just over this. And then you're just simply trailing price down on the dominant candles. It's kind of like one-time firming down, except not really, or one-time firming up. So, once we get your entry in here, and you get this dominant candle down, your risk comes to the high of this dominant candle, like spinning like doji candles, these are not dominant candles, another dominant candle, your risk comes to the high of this dominant candle. Now you're in profit in the trade. Undominant candles, there's a dominant candle, so you're just trailing your risk down. When you get a situation like this where you have a consolidation backed by two dominant candles, you have a choice to either trail your risk lower or keep your risk above the high of the dominant candle going into consolidation, because oftentimes we'll check back into the consolidation, find sellers, and then roll over. So dominant candle, your risk is down here. Undominant candles, dominant candle, dominant candle, dominant candle. You probably stopped out on this trade on the move back right here of this candle, unless, like I just said, you're keeping your risk above the high of the consolidation of the dominant candle that creates a consolidation, which would be this one. And like I just said, price tests into the consolidation, find sellers again, and now you have a new situation where you're trailing your trade down against all these dominant candles. Hope that makes sense. We're running to the top of the hour, but I'll try to get through the rest of these examples. Here's another one. I won't spend too much time on it, but you're just looking for price moving up, looking for the dominant candle to be breached, dominant candle gets breached, and then you start trailing the trade in the other direction. Another situation, price is moving up. We're coming into this execution target zone. We're coming into the MTS number, and this is a situation where you're watching for the dominant candle, price blows through this area, but it's still an area where price reverses. If you would have just simply faded this, you would have likely been stopped out. But if you wait for the dominant candle breach, which is clearly right here, a dominant candle up and then a dominant candle down. So what we're seeing here is sellers taking control, or a dominant force stepping in to potentially reverse the trend up. Then your entry is down here on this breach of this dominant candle, or somewhere in here on this pullback, and you're not taking much heat and you're in profit on this trade, right? There's another situation coming into range long. You're looking at these dominant candles. The last dominant candle, here's your breach. And then you get an immediate reaction, trailing your trade up. Same thing here. If you're probably stopped out on this, either under here, or depending on your aggressiveness, under here or under here. And then the same thing happens down here. Dominant candles coming down. You're just trying to be stalking along the breach of the trade, and then continuation. Here's an example of this morning for the trade that I took in oil. So oil's moving up into range short. I'm stalking the short. We come in here to range short. Here is the dominant candle. Then we have this reversal. I chose not to use this as a dominant candle. This was my dominant candle. We came down and made a low under the dominant candle. I shorted against the 71.39, covered half, and so the high of this dominant candle was 71.43. I had my risk at 71.45, just 2 ticks above this candle. This candle high here, 71.41. So I took 2 ticks of heat on this trade, and then I scaled out of half of it for plus 11, so nearly 2R. And then I just started trailing it down on these dominant candles and got profit stopped out of the last half at 71.23 on a high, on a move back above this candle. This is the same look at the same chart, oil chart from today. It came to range long. Here's the area that I just showed you guys, that range short, and just another view of the same chart, moving to range long, and then there's that situation that I just talked about. So I'm executing on a very small time frame. I figure if I'm going to sit here for 3 hours, I may as well be able to decrease my risk by really looking at markets in a granular way, which was why I use such a small chart. And then I'm still able to capture runners with very minimal risk by using this methodology. All right, that's what I have for you guys. When I come back, we'll look at the second part of law of motion, swing highs and lows, and we're just past the top of the hour, so I'm going to hand it back to Nate, and I hope that was helpful.
Excellent. Thank you so much, Tony. And yeah, as Tony mentioned, for part 2, we will go ahead and set that up for a future date. So stay tuned, and we'll let you know as soon as we have Tony back. So Tony, we do have a link to share. So there you go. I was going to see if you want to show him, give him a little preview here for this trial. And we also had a question come in for you, Tony, really quickly. I will make this link available in the chat, but also going to ask you this very quickly. Pat wanted to know, Tony, do you have a daily live trading room as part of your service? If not, will you be offering one in the near future?
So there's a client feed right now. The client feed is actually closed. I am doing some small group mentoring, and that's going to be starting up in early April, the second inaugural. We just had the inaugural group back at the start of the year, and asked to do mentoring for probably a decade, and I've always shied away from it. Finally started doing some, finding that I'm really enjoying it and really like working more closely with individual traders. So if you're interested in that, feel free to reach out. And the second group is going to be starting up in early April.
Awesome. Cool, Pat. Well, I hope that answers your question. So stay tuned. He's ramping up to start another one here in April. So if you want to follow him, check out his website, follow this link that we've shared. And Tony is very responsive and directly involved with the traders he works with. These are his personal trade plans, and he makes himself available to you. So you have that link in the chat. Tony, tell us a little bit about what they'll get with this trial.
Yeah, so with this trial, you're going to get access to every market that I cover. So ES, YMNQ, RTY, 6 ECL, and GC. You're going to get access to the desktop app where you can pull up the written trade plan. You're also going to get access to the mobile site where you can pull up the written trade plan from any device, phone, tablet, whatever the case may be. I'm going to toss in a indicator license for the life of your prescription that normally runs $400 for one platform. So if you're using NinjaTrader 8, it's $400, $397. Or if you're using two platforms, $597. You can lease it for $97. I'm going to give you this for free with this partnership with Ninjacators. And the trial is $97. The price of the service is $347 a month, $347 a month. So the trial will be $97. It will rebill at $347 a month. But, you know, you can go ahead and take the trial, get access to all 7 instruments. If you decide, you know, most people don't trade 7 instruments, but if you do, that's great. If you only trade, say, ES or CL or whatever, just take the trial, cancel the trial, sign up for one instrument, email me, tell me that you were on the trial with Ninjacators, and I will go ahead and transfer that indicator license over to the single instrument so that you don't have to buy it or lease it. And yeah, check it out. Reach out.
Excellent.
I'm available.
Very cool. No, we're very appreciative, Tony, not only the presentation you've done today and in prior sessions, but also making this trial available to us. This is exclusive to these sessions. You won't find this elsewhere. So Tony has knocked down a lot of barriers to get in and get started and see what he has to offer. So as he mentioned, that indicator, he will waive all fees associated with his indicator, even if you decide to come back and just follow one market like the ES. So very great opportunity for you guys. So we very much encourage you to hit that link, check out what he's got on offer for you. So we went a few minutes today. We had some great questions. That's no problem. We always enjoy engaging with all of you. So thank you for sticking around a few extra minutes here. I want to thank Tony again for joining us. I want to thank Richard, as always, for the great analysis and the levels to lock, as well as some of those additional insights he provided us today. So we will be back on Monday at noon Eastern time. So please join us again for the next session of Profits at Noon. Just a reminder, we are live 3 days a week, Monday, Wednesday, and Thursday at noon Eastern time for Ninjacators' new weekly live event, Profits at Noon. I'm your co-host, Nate, co-hosting these sessions with Richard Krugel. And on behalf of all of us here at Ninjacators, thank you again for joining us. Have a great weekend. Feel free to reach out to us at support if anything comes up in the meantime, and we'll see you Monday. I will give our co-hosts here a shot to give you guys a goodbye and any parting wisdom.
Yeah, thanks, Tony. Great analysis there. We do sort of agree sometimes on the same sort of things. I think a lot of beginners struggle with. Pretty cool to see that sort of reinforced by someone else as well. Again, yeah, thanks for joining us today, Tony. And yeah, look forward to your other session. I think probably work you in again, I don't know, next week or the week after. And yeah, that's pretty much it from me for today. Thanks again for joining, everyone. A lot of new faces again. Thanks for the questions. Keep them coming. And yeah, have a great rest of your day and have a fantastic weekend. And we'll see you on Monday again.
Perfect.
Yeah, awesome. Thanks, Richard. Thanks, Nate. Thanks to all the participants. And yeah, it's nice seeing confluence and learning new things. And I would just encourage everybody to always remember to manage your risk.
Fantastic. Absolutely. That is
cool.
That is like some of the most important advice we'll dish out here in these sessions, especially when, you know, everyone's on the same page. You know, it's important. So take that to heart, and I'll give you one parting terrible dad joke on the way out, as promised yesterday. This one is actually in theme with a lot that's going on right now, so I'll hit you quickly. Why did the banker quit his job?
Hit me.
Any takers? Well, he was losing interest.
No.
Womp, womp.
Wah, wah.
For better or worse, you're welcome for that one. And again, thanks everybody.
Thanks.
Have a great weekend. We'll see you again on Monday.
Cheers, everyone. Take care. Bye-bye.
Take care,
Bye-bye.
guys.